Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to dive into pot stocks. There's short sellers on the hunt, as well as some additional capital raises that we'll dive into from last week. We're going to get into this reefer madness breaking down the cannabis industry. But first, let's talk about the groundbreaking purchase from 48 North of a U.S. cannabis company signaling a major shift by the Toronto Venture Exchange. This article from MJ Business Daily goes on to say, quote, the move could mark a major shift for the Canadian exchange and could open the doors for more cross-border acquisitions, provided the deal meet strict conditions. The apparent change in stance comes after a Canadian cannabis company listed on the Toronto Stock Exchange purchased a U.S. cannabis vaporizer company over the summer. That transaction could serve as a blueprint for other cannabis companies up in Canada seeking to enter the U.S. market without running afoul of the Toronto Stock Exchange's rules. Previously, a Canadian company trading on the Toronto Stock Exchange could risk being delisted if the following situations occurred. Number one is direct or indirect ownership or investment in U.S. companies involved in cultivation, distribution, or possession of marijuana. Two, commercial interest or arrangements with such companies. Three, provider of such products specifically designed for or targeted at such companies. And four, commercial interest or arrangements with companies engaging in ancillary service activities. So pretty much everything that touched American companies, the Toronto Stock Exchange was not allowing you to take that public money, come back into the U.S. and buy presumably Schedule One drug or narcotic companies. That's starting to loosen up. I think with the Safe Banking Act that just passed in the U.S., a huge signifier to Canada that this is moving forward in the U.S. And you've seen BlackRock and institutional investors getting involved. Bank of America is reporting on stocks. And so this industry is moving forward. It's all about revenue as certain local municipalities. Illinois, their pension system is bankrupt. So, of course, they just became the 11th state to legalize. You're going to see a lot more of that moving forward. And yet, Canadian capital raises surpassed $10 billion. Before we get into that, we're going to look at how M&A transactions are sliding in the third quarter. Canadian mergers and acquisition activity fell by about 31% in the third quarter to its lowest level in 8 quarters, and IPOs have also slowed. Canadians involved in mergers and acquisitions have totaled almost $50 billion in 3 months as of September 30th, while IPOs have raised $774 million in the quarter. Trade and economic uncertainties meant that companies were less confident and therefore less interested in acting. In the cannabis space, there's been a significant stock market adjustments over the past few months. From an M&A and deal flow perspective, companies are also hesitant to dive into something given the political uncertainty you have right now. The biggest deals announced during the quarter included the Blackstone Fund's $4.2 billion acquisition of Dream Global Real Estate Investment Trust. Equity raisings doubled to $10 billion in the third quarter. Debt deals rose 12% to $42.8 billion. And yet cannabis short sellers are circling at an amount of over 200 million in the last couple of days. First quarter saw really good gains in the ETF overall portfolio markets with inclines as much as 48%, almost 50%. But after that, a lot of profit taking, and they've seen about a 62% correction. We're about at that bottoming level with supports reaching that level in the next couple of weeks, maybe a couple of months. So we're going to see some inclines as there's been a significant retracement. That's not stopping the short sellers from aggressively piling into the cannabis space this year, with short interest up 55% this year to a tune of $4.5 billion, according to this Yahoo Finance article. They go on to ask the question, is short squeeze in play? Quote, short selling profitability over the last 2 quarters has lessened the possibility of multi-stock short squeezes in the cannabis sector, but continued high stock borrow rates will continue to slowly squeeze some shorts out of their positions as their profits slowly erode away. The 5 largest companies that are being shorted right now are Canopy Growth. They have $1.2 billion in shorts. Aurora has $759 million. GW Pharmaceutical, $459 million in short interest. And Kronos has a $420 million short interest. Benzinga's take is, quote, cannabis stocks will likely continue to be volatile in the near term while the industry matures. Both long term buyers and short term sellers should understand bets on individual stocks in either direction, that they remain high or risky rewards play at this stage. Since there's been over 800 cases of vaping related lung disease and 12 deaths across 10 US states, it's definitely getting some short sellers on board. So, quote, fund managers say an increased short selling is a sign that the industry is transitioning from a can't lose proposition to a shakeout that will leave only the highest quality companies standing, end quote. Definitely going to create some consolidation, some capitulation. Companies will go out of business, that we've said, if they don't have enough SKUs, if they don't have other ways to diversify, if they aren't a retail store, if they don't have other brands with other products, you're definitely going to see some forced consolidation or capitulation as this vape debacle moves forward. Short selling will likely continue to weigh on share prices until legislation allows for more giant funds to compete, such as Fidelity Investments, T. Rowe Price, for them to take on larger positions in cannabis companies. The article goes on to say, quote, it's going to be a while before big institutional investors can have access to the cannabis space, and that takes away from the incremental buyers that could push stock values up. The lack of support from capital markets will also weigh on companies trying to expand in newly open markets such as Illinois and Massachusetts, making it harder for those with weak balance sheets to survive. Yet some fund managers maintain that short selling is already overdone, with the possible health benefits of cannabis boosting its long term appeal. There's a little bit of a feeding frenzy happening right now, and everything good is getting thrown out along with the bad. A lot of this has to do with just the timing of it all. There's a lot of asset allocation or reallocation of portfolios. So when traders go away in May, they sell and go away. They come back after Labor Day, and they're selling off all of their, uh, you know, higher returns, looking for more value opportunities. There's a lot of shuffling right now. Not to mention that the trade tariffs and everything else politically, economically, globally. There's a lot of trade, everything's slowing down with global trade, a lot of tariffs and politics and all of that. But I think that once that settles down, you're going to see a massive inflow or reallocation into the cannabis space for speculators and people looking for a higher return. And so you're already seeing cannabis capital raises surpassing $10 billion. In terms of capital raises with M&As, this year you've only seen one deal versus four last year for M&As. On capital raises, it's almost similar, 15 deals last year versus 13 so far, although the dollar amount is less. Capital raises by sector continue to be cultivation and retail. A lot of multi-state operators are moving forward, and then cultivation is being gobbled up. You just saw for $12 million TJ's Gardens out of Oregon. Now, Oregon has a 6.5 year oversupply, but that just tells you how good TJ's Gardens is. Phenomenal strains, probably one of the best consistent growers I've ever encountered. And so from California to Oregon, there's going to be a lot of people looking for vertically integrated opportunities along with real estate. Real estate investment trusts are going to gobble up multi-state operators or MSOs looking for just interstate national brands. Some of the top investment, mergers, and acquisitions activity in the cannabis space last week included Oxley Capital, a Canadian diversified investment vehicle building out a portfolio of international cannabis assets, closed a $123 million strategic investment from big tobacco company Imperial Brands that's convertible into a 20% ownership. Sounds like a blank check company from big tobacco, and they're just going to buy what they want. Great. Next up is Cresco Labs. It's one of the largest multi-state operators in the U.S. They closed a $73.5 million public offering. While the capital markets in cannabis have slowed down, the public markets have sold off. Select operators, particularly those with larger asset bases and footprints, have been able to continue raising capital, especially if they're positioned in markets with significant future potential to further build out their operations, just like we just mentioned. Pharmaceutical RX is a licensed operator in Pennsylvania and Ohio. They announced the closing of two capital raises totaling $18 million. Green Peak Innovations, one of the largest licensed operators in Michigan, they raised $10 million mezzanine debt round to accelerate the development of its infrastructure. So they got a bridge loan with debt. So I'm assuming that there's some property, plant, and equipment behind that debt as collateral. But I love the idea of a bridge loan or mezzanine debt round because that's just normalizing. It's saying that there's a lot of confidence in the industry, and we're just kind of seeing more unique deals for the cannabis space, but normal in the regular world when there is a market, when there is legal opportunities to bank and and the confidence as well. So it's just normalizing and professionalizing and very, very interesting. Canna Swiss announced a $5.5 million investment. They're a CBD provider in Europe. They were invested. Money came from a New York City based cannabis food fund, the Altitude Investment Management. A deal illustrates two trends. One, the continued expansion of CBD markets globally, and two, the steady expansion of investment focus on the burgeoning cannabis and hemp opportunities in Europe. Cannabis mergers and acquisitions had a Jushi Holdings, relatively new U.S. multi-state operator, expanding into new states via the acquisition of Dalitso. It's one of 5 current medical cannabis licenses in Virginia. While this transaction is not merely significant in size, it reflects a continued trend whereby operators continue to acquire licenses in states that have limited license structures to present favorable competitive environments. So we've seen, Nevada is one of those where they have limited license opportunities to create, kind of a monopoly on price. Flower always tends to be anywhere from $25 to $30 when a new market emerges, and Nevada has been really, really slow to bring that back down. Maybe because of tourism, maybe because of limited licenses, but it's definitely an investor's dream to run into a place like what Ohio tried to do, which only was going to give 5 licenses. They turned that down. You also saw some stuff in Florida where they wanted $20 million and 30 years experience. So some of these states are going to have unfair advantages like Virginia. So just have to kind of wait and see what happens. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.